Okay, why don't we get started? Welcome, everybody. Good afternoon or good morning, depending on what time zone you're in. Welcome to the Fundamentals of Franchise Insurance webinar brought to you by ApplePie Capital and Intrepid Direct Insurance. My name is Ron Feldman. My co-panelist, if I can get the slide to change, there we go, is Alex Whittit from Intrepid.
Hey, good afternoon, everybody.
Yep. It's our goal today to kind of educate everyone on some best practices, some pitfalls, and help you look for ways to save money on your insurance bill, no matter who your provider is. We hope that at the end of this, you'll have gained some knowledge and perhaps would want to give Intrepid a shot to quote you on your next policy, or even in between. Just some housekeeping. If you have questions, everyone's muted. If you have questions, please use the Q&A button on your Zoom dashboard. We'll have someone monitoring the chat as well. And we're just going to go through a quick program, get you some education, and hopefully get you some knowledge. I'll start by grounding everybody in kind of where things are. You all have to purchase insurance. You don't have a choice per your franchise agreement. In fact, what the minimum coverages are also mandated by your franchisor in most cases. Business insurance, especially if you're a first-time franchisee, is something you've probably never purchased. And insurance is really not a commodity. Everyone kind of thinks it is, because if you buy insurance and you have a claim, you get a check. It doesn't always work that way. And the service that you're getting and the service levels that you're getting change from provider to provider. If you're using a broker, they're charging you as a percentage of your earned premium a commission. That's very important as we get further into the program. And then also many insurance companies will finance your premium. They're charging you for that. And you're paying some more for that as well. With that, we'll jump right in and begin by looking at the declarations page. Now, Alex, we've highlighted what looks to be a very confusing piece of paper to someone who's never looked at it before. Can you kind of walk us through what this means? And
yeah, of course.
how they should be looking at it?
Yeah, so as Ron said, this is called a declarations page, or commonly referred to as a deck page. It's your basic information on your insurance policy. It's going to give you your policy number up there at the top left, number one. So if you're trying to track down your policy number, if you have a current policy in place, this is a good place to look. But then it's going to jump into some basic information, some high-level information on your insurance policy. The number two bullet in there is who's the named insured. That's actually a pretty important piece of the policy. A named insured on a policy is who the check is going to be cut to in the event of an incident. It also is who is primarily afforded liability for any kind of situation that arises. So in this scenario, ABC franchisee, if something happens on their grounds, a slip and fall or any other kind of liability suit, and the franchisee is sued, ABC franchisee is the who the liability is afforded to. Also, in the reverse scenario where like maybe their property damage, something occurred there, that's who the check's going to be paid to. Now you can manipulate these things by adding different things like additional named insureds and loss payees to the policy. But generally speaking, the named insured is the most important listing on the policy as far as who is responsible for what. Getting into a few other bullet points real quick here. The policy period is listed on here. You see that on number 4 there. So that's just the dates that the policies run from. So obviously, so insurance contracts generally renew annually. You get down to a little bit further on the page, and this declarations page is showing you what is built into this specific policy. So you can see on this one, this has some property coverage, a general liability policy, an auto policy, and a commercial umbrella policy that's probably sitting over the top of those policies. Something that you don't see on here is workers' comp insurance. A lot of times workers' comp insurance is on a separate policy. But this specific declarations page is going to show you what's built into this. So if you have multiple policies, each deck page is going to show you what's built into that, and then the policy premiums associated with it over there on the right.
Awesome. And so many times our franchisors listed as well, or they become additional insureds or lenders.
Yeah, perfect. Glad you asked about that. So a couple of different people, as I mentioned, you can have additional named insureds on there. Your franchisor is almost always going to require that they be listed as additional named insured. The reason is, let's say you own an Orange Theory Fitness and you get a lawsuit brought against you. A lot of times they're going to list not only your franchise name, but Orange Theory on there, since it's an Orange Theory. So the franchisor wants to be named as an additional named insured on there in case a lawsuit is brought against them for something that happened at your franchise location. This policy would then protect them as well for that. Another group that may ask you to be listed on there would be someone like your lenders, such as ApplePie Capital. That way, as I mentioned, the person listed as additional insured or as a named insured on there is who the check is cut to. So if ApplePie has lent you money to pay for your building, they want to be listed on there as well to kind of protect them, that if a tornado or a fire happens and the building is a total loss, the money they lent you will then be refunded by the insurance company in this scenario. So that protects them as well, that if someone they lent money to goes out of business, that they're going to, due to some kind of covered loss, that they're going to get money back from the insurance company to repay the loan.
Gotcha. So they're not unreasonable requests if they come to you.
No, definitely not unreasonable request. There are people that have people or organizations, I should say, that have a financial interest in your business. So if something happens, such as a fire, tornado, some other type of loss, they have a financial interest they need protected as well. So definitely not an unordinary request. It's pretty standard.
And this declarations page is the same regardless. It's a uniform document regardless of who the carrier is.
Yeah, pretty uniform. Some small little tweaks and things on there, but yeah, generally speaking, the deck page is pretty standard.
Gotcha. So what affects premiums? Can you just walk us through this slide? And this is kind of the shopping slide, right?
Sure. Yeah.
This is where you can either lose money, make money, or one or the other.
Yeah. So affecting premiums, probably a little bit more obvious example is the coverage limits. So take a building property limit, for example. It costs more money to insure a $2 million building than it does to insure a $1 million building. So when we're talking about policy limits, that's one policy limit. That would be your property limit. But there's also things such as liability limits. So different franchisors require different limits. Some may require a $1 million general liability policy with a $1 million umbrella over the top. Others require $1 million general liability policy with a $3 million umbrella over the top. Generally speaking, franchisors, when you get over 5 locations, some are 5, some 8, some 10, they're going to increase the liability limits that they require on you. So they could start off requiring a $1 million umbrella, and if and when you break over 5 locations, they may say you need to bump up to a $3 million umbrella. But so the limits that you're carrying obviously affect the policy premium. The higher the limits you have, the more policy premium you're going to pay. That also has to do with coverages. So some franchisors, it's becoming more and more common nowadays for the franchisor to require cyber liability and for them to require employment practices liability. So adding those additional coverages also affect your insurance premium. So check your FDDs and see what coverages are being required of you there. Going down here, so payrolls affect mainly your workers' comp premium. So workers' compensation policies are based off of payroll. So again, if you have $100,000 of payroll versus $200,000 of payroll. Generally speaking, the work comp policy is going to be exactly 2 times as much for 200,000 as it is 100. It's very scalable. So the more payroll, the more the workers' comp insurance policy goes up. The loss rate, as everybody probably knows from your personal auto insurance or your homeowner's insurance, losses do affect your rates. So some of those are within your control just by having good procedures and rules for your staff and customers to follow. Other things are less in your control, like a tornado hitting your building. But all losses affect policy premiums. Different locations are in high or low hazard zones. So if you think about hurricane zones such as Florida, your policy premiums are going to be significantly higher there. But it also has to do with flood zones, where it's in a flood zone, whether that's a river flood zone or an ocean flood zone, a lake flood zone. Those things all impact your policy premiums. Also, what we're seeing more and more of is hail zones. So hail has become a pretty big issue in the US. So your big hail territories from Texas all the way over to Alabama, the entire South there is kind of affected by hail zones. These aren't drastic changes in your policy premiums, but they will affect your deductibles as well. So you can see higher deductibles on your property insurance in those zones. And then the final thing we have on here is just the broker commissions. So the way a broker model works is you go as a franchisee to a broker, you approach them, and they shop your insurance with several different carriers. Well, the brokers charge a fee to do this. The insurance carrier pays them this fee. So when they're shopping your insurance and doing all that and then place your coverage for you, they do charge a fee to the insurance carrier. You never really see the fee. It gets paid by the insurance carrier. But the insurance carrier bakes that into the rates that they're then charging you. But they get paid a fee, generally somewhere between 15-20% to place your insurance for you.
Gotcha. So can you give the 30-second explanation on what an umbrella policy is that you mentioned, just because some people might not understand?
Yep. Absolutely. So do you mind flipping back that deck page real quick?
Yeah, I'll try. My arrows are not working, so
that's all right.
Hold on. Now I figured it out. There we go.
Okay, so if you see down there at item 5, this list of those policies. So an umbrella policy, we use the term sits over like that general liability policy and that auto policy there. So even if you're thinking about your personal auto policy, if you have a $1 million limit for on your auto policy, what that means is if you get in an auto accident, that specific policy would pay you for damages up to $1 million. The horrific scenario we always use in insurance is if you hit a school bus full of kids. As you can imagine, that could be quite a bit more than $1 million worth of damages there if that was the scenario that happened. So at $1 million, your auto policy has now ran out of coverage. It will stop paying out. It's hit its limit. Umbrella comes in, and if it's a $1 million umbrella, it stacks on top of that $1 million auto policy. So now you have $2 million of coverage. Whereas if you had a $2 million umbrella stacking on top of the $1 million GL policy, you're gonna have $3 million of coverage. So every amount you increase your umbrella raises the total liability that's afforded to you in the event of an accident. So, and then when we say sits over, it means the policies that it's essentially adding to the limit. So if I say it sits over the general liability and it sits over the auto and it's a $2 million umbrella, you now effectively have $3 million in coverage on your general liability, $3 million in coverage on your auto policy. Does that make sense?
Makes total sense. Just could be a foreign term to some folks.
Yep.
Okay, let's talk about the coverages that you need. I think you covered a bunch of this on the last slide. Speak to the couple of kind of unicorns here: the abuse, molestation, the trainer, professional liability.
Sure. Yeah. So the ones on the left are your pretty standard coverages that we've touched on. I'll touch on these ones on the right real quick. So abuse and molestation, generally speaking, for the franchisees that we talk to, this is going to be your gym owners. So your Orange Theories, your Planet Fitnesses of the world. It's the coverage for, your trainer working with someone. That's where we see the most abuse and molestation coverages. Generally, your FDD is going to require you to have coverage for this. So speaking specifically for Intrepid Direct, we build this into our package for any gym franchisee that comes to us. I think we might touch on this and again in a minute, but for any franchise, Intrepid Direct is inspecting FDDs, and we're going to automatically build in all of the coverage that's required on your FDD. So if you're an Orange Theory owner and you need 300,000, I believe is the limit of abuse and molestation coverage that Orange Theory corporate requires, we go ahead and build that into the policy automatically. That is not standard for all carriers. Abuse and molestation is a specialty line, so sometimes your agent's going to have to go find a separate policy for that. Cyber liability, as you've probably heard, has become a bigger deal all around the world, but it continues to rise and rise. We've got to the point where franchisors are now requiring cyber liability on most franchisees. It started off with lower limits, and now we're seeing about $1 million requirement on most policies. So it gets a little bit, for one, more expensive, placing $1 million of cyber liability, but also limits your options. A lot of carriers are comfortable building in a small $100,000 limit, but when you request $1 million, they're going to have to get a separate specialty line policy for you. Again, Intrepid Direct would solve that for you if you're coming to us for the cyber liability. The employment practices liability. So this is what covers wrongful termination, any kind of sexual misconduct in the workplace. This is different than abuse and molestation. So abuse and molestation is generally applying for your employees to a customer or something like that. Employment practices like abuse would be more like slandering an employee, saying something to them. It also has to do with all the hiring and firing laws. This is a line of coverage, again, that's being required by franchisors. We're seeing a ton of lawsuits from employment practice related concerns, whether that's hiring, firing program or issues, any kind of slander or something that you shouldn't have said to an employee or one employee says to another employee. Just in general, those types of claims are really on the rise nowadays. And then the last one on here is just another kind of fitness specialty line. It's just the trainer professional liability. So again, so I'll also use Orange Theory as example still. If your trainer's telling someone, hey, run on that treadmill, run harder, and then someone says they injured me, telling me to go harder or something like that, and it was due to their professional advice as a trainer, that's going to fall under professional liability. So again, a coverage Intrepid Direct is going to have built in for any kind of fitness franchisee coming to us.
Yeah, but in the QSR world, everything except perhaps the trainer professional liability would still be.
Actually, the QSR world, we don't build in the abuse and molestation like the fitness franchisees, and then or the trainer and the professional liability, correct? But yes, we would have the cyber and the EPL coverage on the QSR restaurant.
And does that cover the cost of defending, the legal cost, or is it just the end result?
Great question. Yes, it does cover the cost of defending. What does separate policies, however, is whether the legal defense costs are built into the limit or whether they're outside of the limit. So particularly something like a employment practices liability claim, maybe you have a claim where, again, horrific situation, but a manager was abusing 5 employees and all 5 of them sue. If that lawsuit gets dragged through court for 1.5 years, as you can imagine, those attorney fees could really pile up. So if you have $1 million limit, but you spent $500,000 on attorney fees, really you only have $500,000 left for whatever settlement is decided on. So something to look at and something to question is whether the defense cost is within the limit or outside of the limit of insurance. And that does vary from policy to policy, and it does affect premiums if it's inside or outside of the limit.
That's a big nugget for everybody. I'm not going to lawyer bash on this call. I do enough of it. So how much coverage do you need? I mean, I think what I'm hearing is you guys specialize in only franchise finance. So, and you take a brand first approach. So why don't the FDD is kind of black and white. It tells you what the minimum coverages are. That may or may not be right, depending on whether you're a 1-unit operator or a 30-unit operator. What kind of advice does Intrepid have that a normal broker might not?
Yeah, so today, so Intrepid Direct's been around for about 8 years now. Today, we insure close to 15,000 franchise locations nationwide. So odds are, whatever type of franchise you have, we insure several of them across the nation, if not hundreds or thousands of them of the exact brand. So we're very familiar with the FDD requirements of every brand. Even if it's a newer brand to us, it's going to fall into a category that we work with today, whether that's QSR restaurants, fitness restaurants, delivery restaurants, really anything in the franchise space, we're going to have a pretty good grip on. So yeah, what we do as a starting ground is make sure that we're covering everything that's required of you in the FDD by your franchisor. Next step is asking questions such as, do you own your building, and other things to identify areas where we may need to increase the coverage from what the franchisor is requiring. Keep in mind the franchisor primarily is trying to protect themselves. So you may have other interest in your within your franchise that you need covered on your insurance portfolio that the franchise isn't requiring. So definitely things like building limits, contents limits, things that maybe your lender is requiring if they gave you a loan to buy all of your contents and equipment and things like that. Also auto policies, if you have owned autos owned by the business, things like that are what we're going to take a deep dive into. The other thing is a lot of new franchisees don't know coverage limits that they need. The nice part about doing business with us is we have averages across brands and across verticals. So like we can tell you what the average Orange Theory equipment is insured for. So if you bought an existing franchisee and you're like, well, I don't really know how much this equipment is worth or how much it would cost to replace it, we can definitely help you with those policy limits by looking at the averages across our brands that we currently insure today.
Great. And then on the common sense piece, being overinsured just costs you more money. You want to make sure you have just enough.
Correct. Yes.
To cover your risk.
Yeah. So we can advise on things like we talked about umbrella limits. We're not going to advise a 1, 2, 3 location franchisee to have a $10 million umbrella. That would be overinsured for that size of a business. Same thing with contents limits or building limits. How much is this building worth? Building limits aren't generally inflated too much, but just to use an easy example, if you had $1 million building that cost $1 million to rebuild that building, but you have a $2 million limit on the building, they don't just cut you a check for $2 million. They rebuild the building and then pay the contractor what it costs. So it doesn't do any good to be insured for $2 million if it only costs $1 million to rebuild the building.
Gotcha. So this slide to me, when we calculated it, just blew me away. And this is, for every $100 you bring in, this is how that $100 is broken up. Are these percentages still in line?
Yeah, they're still in line. It is kind of surprising. So in this scenario, the company is the insurance company. So yeah, generally 50 to 55% of every dollar collected goes towards paying claims. You may think, well, I've never had a claim before. I've had insurance for years. You got to remember, insurance works as a pool. So you and 10 other people in there. So the other people may have had a claim, but generally speaking, 50 to 55% of every dollar goes towards paying claims. The other 15 to 20% for the insurance company is overhead, things like offices, claim staff, personnel, service people, underwriters, actuaries, salespeople like myself don't work for free. So there's a 15 to 20% overhead for the insurance company. The next line, that 15 to 20%, is the commission paid to the insurance broker. So the insurance brokers do pull down a pretty nice little check for placing the insurance. And then that final 10% is the profit that the insurance company is making. So in this scenario, after the insurance company charged you $100, $10 of that went to the insurance company for profit. $15 to $20 actually went to the agent for profit.
And, if someone's using an agent or a broker, they're dealing generally with someone who's also getting a commission from the insurance company. So you're really paying twice for the sales costs if you're dealing with a broker.
Yeah. So the company pays them, the insurance company, and then that's what drives the rate on the insurance side.
So the challenges for this year and next, everything costs more, right?
Yeah.
Like, I don't think anyone's labor cost is going down. I don't think anybody's supply chain costs are going down. Nobody's gas prices are coming down a little, but they're still higher.
Yeah.
What, where do you think, somebody, everyone here is already a franchisee. Where do you think that they might be able to save some money?
Yeah. So we're talking about insurance. So insurance is definitely a place to look at trying to save some money. So I would for sure shop your insurance every 2 to 3 years. Just to make sure you're getting a good price on that. If you're getting a quote from us, we would love to try to see what we could do for you. Um, but yeah, keeping your coverages and things in line, making sure everything's properly insured, your building limits, your content limits, updating your payroll, um, things that it could cost you more, but need to make sure are in line. There's things like your payroll with minimum wages going up. People are familiar with just recently happened in California with that minimum wage increase on QSR restaurants. Those will unfortunately affect your workers' compensation prices pretty drastically with that increased payroll pushing up the workers' comp premiums. But there are definitely things to keep in mind and keep on top of. What you don't want to have is a surprise at the end of the year, because what insurance companies do is an audit at the end of the year. So if your payroll increased 20% and your agent didn't get your payroll increased for you on the front end, what you don't want is a surprise audit at the end of the year where they tell you owe 20% more premium because they never increased the payroll, and that was your payroll throughout the year. So just something to keep in mind there is make sure all your policy limits are aligned. You'd rather know on the front end than get a surprise audit a year later.
Absolutely. So for those that are with their broker and the broker is their brother or sister-in-law, what are the questions they should be asking them right now?
Um, I would for sure ask them, if whoever your agent is, hey, when's the last time you shopped this? Maybe at this renewal, can you come and show me 2 or 3 different options? If they're a broker, they should definitely have at least 2 or 3 different options that they can show you. So I would ask to see those options at the renewal. If you're with X carrier and you've been there several years, it's like, hey, I would like to see my renewal from this carrier. Then could you show me 1 or 2 other options from carriers that you approached? Um, Particularly if your agent, your brother-in-law, or whatever it may be, I would still approach Intrepid direct for a quote. We're not real pressure heavy, so if you guys want to get a quote from us, it's pretty simple. We'll get that to you. If you want to then bring that back to your brother-in-law and say, hey, here's where Intrepid direct's at. How do you compare to them? I would do that as well, both from a pricing standpoint and a coverage standpoint, just to have those things kind of compared against carriers. So it's always good to shop that insurance every couple of years.
And in terms of being in some of those high risk areas, just understand you have fewer options.
Yeah, for sure. Folks in Florida generally know this, but Florida's the toughest insurance market in the U.S. So if you're in Florida, you're probably pretty aware of the limited options, but options continue to shrink. Just with the, there was a tornado in Nashville a few days ago. So seeing tornadoes in December is not very common. So weather phenomenons are really changing insurance outlooks. So there's less carriers available, particularly in cat areas like Florida, South Texas, California, things like that.
So what are the things that folks should really consider important in terms of these bullets?
Sure. So these are really just speaking about expertise. So we've touched on the number of locations that Intrepid Direct insures today. So in general, we think it's a good idea to have your insurance with someone who truly understands your risk. Not to pick on the brother-in-laws and things out there, but a lot of times you can do yourself a disservice with going with the person that you know well or is down the street when that person doesn't work with similar industry type risk. If you're the only fitness facility they insure, the only QSR restaurant they insure, they probably don't know what they don't know. So they don't know the risks that are coming up, the common claims that are happening. The insurance carriers they may be placing stuff with may not be overly familiar with claims. The thing about Intrepid Direct insuring nearly 15,000 franchise restaurants or 15 restaurants, fitness facilities, and other franchises is we see a ton of claims. So we're very familiar with that day-to-day bad food claims on general liability, food poisoning claims, slip and falls in gyms, all these types of stuff. We see them every single day. So it's another reason to be working with someone, if it's Intrepid Direct or another company that insures a lot of similar businesses to yours, so that they know what they're doing and they know what to look for. A couple of quick things on here is just bundling coverages. It usually saves you money to have all your insurance with one carrier. Speaking of umbrella policies, generally you only want one umbrella that's going to sit over everything, so you're not duplicating the premiums there. You can look at payment plans to see if people are charging financing fees, whether they're offering 12 equal payments throughout the year. Do they accept credit cards for no additional fee? And then just saving from a broker commissions. And the final piece on there is the AM Best rating. So particularly today with finances getting tighter and lending tightening up, that puts the squeeze on insurance companies as well. So you want to make sure you're with an insurance company that's carrying a good AM Best rating. Intrepid Direct, for instance, is A+ rated. I really wouldn't recommend being with a carrier that carries anything less than A- rating on AM Best.
And in terms of Intrepid's offer, it's 12 equal payments with no finance charges that they can put on their credit card, correct?
Yep, correct. So no financing fees, 12 equal payments or monthly installments, and then no fee for paying with your credit card.
So for all those points folks out there,
Yeah, exactly.
big deal. So the takeaways for everyone here are pretty self-explanatory here. Why don't you just comment on things that are
yeah, so as we talked about, I'd review your current insurance policy. If it's coming up for renewal, I'd obviously encourage you to get a quote with us and encourage your broker to come with more than one quote, at least two, to show you your renewal plus another option. Make sure the coverages are in line with what you actually need. And that could be getting rid of something, or that could be increasing coverage. If your payroll has gone up, you need to increase your workers' comp payroll. Building limits are rising quite a bit with inflation. So if you haven't adjusted your building limit in 2 to 3 years, you really need to consider doing that. So number 4 there. So thinking non-traditional. So that's something like Intrepid Direct, where we're non-traditional. So we're not a broker model. We're an actual insurance carrier. So you're working directly with the insurance carrier. But we are offering a lot of cool things like the equal payments, credit cards, and things like that. So non-traditional option, we think we're a better option for franchisees, and we would consider you to give us a look.
So one of the other things I would just add to this is, if your insurance costs are going up, you might want to increase your deductibles if you feel that you can financially afford to do that. I live in Florida, so I'm living the life of 100% premium increases, literally doubled from last year to this year. So we increased our deductible to try and save some money because we can afford a higher deductible. That's where your counselor, whether it's an agent, broker, or Intrepid, that's where they can help you.
Yeah, and they should be able to provide different price points. So if you're looking at $1,000 deductible versus a $5,000 deductible, asking what that does to your premiums. Sometimes it's well worth it. Other times it's not. If it barely moves the premium, you probably want to stick with that lower deductible. Or if it provides a considerable cost savings, yeah, it's definitely worth exploring.
Yep, you gotta ask those questions. You gotta advocate for yourself. We now are through the program. We'd love for you to type in any questions that you have. I think I see something in chat. Open up chat.
I think you just posted the link to
Oh,
our.
okay. Judah just posted the link for everyone. Any questions? I'll give it 30 seconds. Otherwise, Alex, you did such a great job. We don't have any questions. I see everybody stayed till the end, so we didn't bore anybody, which is good. Oh, there's a question.
That's hard to do on an insurance talk.
Yeah, sure. Do you sell all types of insurance? Workers' comp is the question.
Yes. So we do sell a full package. So it would be property, general liability, auto, umbrella, workers' comp, the employment practice liabilities, cyber liability as well. Really, the only thing we don't do is health insurance.
I think that got all 5 of those questions because they were typing in. Yep, we got a thanks. That's good. Okay. Any other questions?
Sounds good. Well, Ron, we appreciate ApplePie hosting us on there, and hopefully we hear some reach outs. We're happy to help anybody that has questions about insurance in general, or to provide your quote when it's coming for renewal.
Oh, hold on. What is the relationship between ApplePie and Intrepid? I'll answer this one.
Sure.
It is one of a partnership. I was involved when Intrepid got started in a prior life, when it was an idea. And when I went over to ApplePie, I thought it was the right thing to do to try and save our borrowers money and still give them a quality product from an educated provider. Kind of hit all of my hot buttons. We ran it up the flagpole, got the proper licensure to do that, and ApplePie receives a small stipend for every policy that is placed. Nowhere near what the broker does, and you're not paying any more for the fact that ApplePie is getting something. So someone else said, will you email me to get a quote? It says anonymous attendee, so we could email you if we had your email. If you just click on I'll put the QR code back up there. And if you click on that QR code, you'll get a quote.
Yeah, the QR code or that link right there.
The link, all the QR code is going to do is take you to that link.
Yep. So
what if you're not in a renewal? Here's a great question. What if you're not in a renewal period, but you're still interested in getting a quote?
Yeah. So we will provide you a quote if you're not in your renewal period. Generally speaking, it's best to switch during your renewal period. But if you want to take a look on something right now, not in the renewal period, then we're happy to do that as well. Just follow that link and fill out. There's a quick 5-question form once you get to that link. Once you do that, it pings us and someone gets in contact with you, generally in an hour or 2.
Awesome. I think we got to all the questions, and we did it in less than 45 minutes. So we accomplished our goal.
Yep.
What's the downside if not in renewal period?
So your workers' comp insurance it's called an experience modification. So that's what your claims are based on. That experience mod, abbreviated, renews every year. So every year it releases a rate for your workers' comp insurance. That's controlled by the state. That's not controlled by the insurance company. So when you switch in the middle of a policy term, it kind of resets that in the middle of it. So it can change the experience rating on your insurance, on your workers' comp insurance policy.
So
the other
follow-up question is, what if we keep our workers' comp? Can we switch?
Okay, so you could do that, but then you get into some more complicated stuff, because then, for one, you got one insurance agent for your workers' comp and one insurance agent for the rest of it. The other issue is, we barely touched on it earlier, but bundling is going to save you money. So with Intrepid, if you have all lines with us, we're going to give you a better rate if we have everything. So if we're quoting both the workers' comp and all the property and general liability, you're going to have a little bit better rate with us doing it that way. The other thing is, there are some gray area claims. For instance, if you send an employee out to run an errand and they're driving their own vehicle and they get in an auto accident, that's actually an auto claim and a workers' compensation claim. So when you have those coverages with the same company, that company knows they're paying out that claim no matter what. When you have it with 2 separate companies, they can kind of point fingers at each other like, hey, you're responsible for this, you're responsible for this. And it creates a little bit of a more complicated situation. So it benefits you having everything with one company, and not only from a coverage standpoint, but a pricing standpoint and probably a convenience standpoint. When you're sending your franchisor an insurance certificate, if you have your work comp somewhere else, you're gonna have to get an insurance certificate from the broker that has the package and the other one that has the workers' comp insurance.
So I guess the short answer is it's complicated but doable.
Yeah,
And if
yes.
you're in one of those states where the state's providing the workers' comp, it's probably easier to do than.
Yeah, so if you're in a monopolistic state like Ohio, Washington, Wyoming, then you're forced to get your workers' comp insurance to the state, so that you don't have an option in one of those states.
Yeah, okay. So there's the answer to the question. It's complicated. That was the answer. Thank you, everyone, for your time today. And we hope you got some knowledge, and give Intrepid Direct a shot at a renewal. I think you'll be very happy.
Thanks, guys.
Take care. Bye-bye.